So what's the difference between a C-Corp and an S-Corp? I get that question a lot, so I figured I'd do a video on it today to let you know the difference between C-Corp and an S-Corp when you're looking to incorporate your business. So the distinction between the two is really one of tax and investors. So that's where they differ substantially. So when you file articles of incorporation, which is what you do in North Carolina and most states to incorporate your business, the default is going to be a C-Corp, and that's referring to the subchapter in the IRS code that it relates to. So in order to become an S-Corp, you have to file what's called an S-election, and it's a form that you file with the IRS to be taxed as an S-Corp. So the difference is pretty substantial as far as tax treatment. So for a C-Corp is considered a double taxed entity. So what I mean by that is you have the corporate level and you have the shareholder level, and a C-Corp is taxed at both. So the net income to the business will be taxed at the corporate rate, and then the income flowing down to each shareholder, the shareholder will receive allocated tax or allocated income as to their ownership share. So it may be per share or based on the dividend amount, that kind of thing. So the net tax overall is a lot greater for a C-Corp because it's being taxed twice. An S-Corp is what's called a flow-through entity, or a pass-through entity. They're synonyms. And what that means is that the tax is not occurring at the corporate level, it's happening at the shareholder level. So the income flows through the entity, and it's really considered almost a disregarded entity for that purpose. So all of the income flows to the shareholders respective of their ownership percentage. So if you have two shareholders in an S-Corp, each of them is going to be allocated 50% of the net income of the business. So that's revenue minus expenses equals income. So that's going to be a substantial benefit to businesses who are more bootstrapped or solopreneurs or small businesses, more so than larger businesses. The other difference is going to be on the investor level. So S-Corps are limited to having only 100 individual shareholders. So if your aspirations are for going public or having a lot of venture funding or crowdfunding where equity is being given or shares are being given, then S-Corp is probably not the way to go. You're probably going to be better off with a C-Corp. So it's important to kind of analyze what your projected outcome is for the business, whether it's going to be kind of a side business or just a lifestyle business where you don't see substantial growth in your future, or you don't see a huge exit to a large company or going public with an IPO. Other than that, they're treated the same. You're filing the same articles of incorporation either way. So you're really talking about tax and investment differences.